So, the first key in understanding how to take because some people, who are working on onboarding in terms of, some contractors are working with and assisting our clients in raising capital. Some of them, sometimes they wonder, how do we look at so many transactions in so many sectors, so many different cases, and then map everything out systematically for so many different sectors, cases, and situations? Well, it comes down to three things. The first one is understanding the objects, relationships, and time frames. Because really, when we look at a system in any system, generally speaking, there's always there are the objects in the system, there are the relationships between the objects in the system, and then there's a time frame and a chronology between them. But when you don't focus on the right objects, when you don't focus on the key objects in a transaction, then you can get lost in all the details. So I'll give you two examples to help illustrate this. For example, if people who play sports, you may understand if somebody's playing basketball. One tip that people always tell you, like if you're playing basketball against somebody who's dribbling the ball like crazy, and you're looking at the ball, you're looking at their arms, you actually have to look at like their midsection. And if you want to know where somebody is, you have to look at their core, or their stomach, or their numbers. You have to look right in their center. And then that's how you keep track of where they actually are. But if you look at like where the ball's going too much, or you look at their hands too much, or their feet too much, then you can get jukes, and then you can get confused, and then you actually miss out on where you're actually going. And if you do that, then you won't actually know where you're going and what you're doing. So that's why you actually have to focus on the core. Similarly, some people, when they do advanced drawings, drawings of really sophisticated sculptures and so on, what people start with, they start with just the outlines and of the main parts of the stomach, the head, then the legs, and the main parts of the human body in the anatomy. But before they go into like the fingertips and the details like that, they have to understand the main parts and then the joints and all the sockets in each joint. And so it's the same thing with the transaction. Because it's a system, and everything that's a system follows the rules of a system, because everything is a system. And so all it is understanding, first, what is the company? What is the company? Who is the principal of the company? What is the company or companies? What is the stage of the company? Is the company something that is generating revenue? Is it a company that has an asset? Is it a company that doesn't have either of those? That's pretty much it, just from a top-down view. And then understanding if the company, what is really the type of transaction that the company is seeking to complete, and for what purpose. So the relationship between the principal, the company, and a potential buyer. And that relationship can look like an equity transaction on that company. It can look like a debt transaction to grow and scale the company, and there's also the reason why it's to grow and scale a company, or it could be to acquire a company or several companies. And then within that transaction, there are different types. So it's to understand for an acquisition, what is the strategy to acquire, how much percentage is debt, how much percentage is equity. If it's not an acquisition transaction, then it's like what type of transaction will it be? It's much simpler, but what type of transaction will it be? And then there's also in that transaction is also the regulatory part of that transaction, and what country the transaction is in. And so when you understand all of the relationships between all these things, then you can talk to anyone in any industry, whether the person's in the quantum computing industry, whether they're in real estate, whether they're in lawn mowing business, and you can just reverse engineer all the details to fit within any type of transaction once you get the objects, the relationships between them, and that's it. From there, the second thing is to understand that there's really, you have to be really good at pattern recognition and understand the patterns, because when you start to see many types of transactions over and over again, there are certain patterns that emerge. And oftentimes, sometimes you'll see if there's an outlier amongst the main types of transactions. because the types of transactions that Raises.com sees are probably different, are extremely different than the types of transactions that a tier 1 investment bank would see, or a tier 2 investment bank. Not too dissimilar from a tier 2 investment bank, probably the same, but they're different than somebody in China, and is different than somebody in Singapore. And so everybody has their own patterns, and the patterns that you see in the types of transactions, and that's why people who have experience, that's why experience is important, because the types of transactions that somebody sees determines the types of objects, relationships, and everything in between them. And if not, then they wouldn't be able to understand what types of objects, relationships, and time frames that exist. And the third part is understanding and managing everything from the top down. Because when it comes to understanding where transactions can go and everything, you have to understand who can actually service a transaction. And that comes from seeing everything from the top down. So, oftentimes getting on a call and learning about a transaction, when you see everything from the top down, that means that you can reverse engineer how the deal can actually get done and have the end in mind. For example, if somebody comes up to you and discusses an equity offering for a very, very early stage deal that has pre-revenue, you can already retrofit it and imagine the types of outreach that would have to happen for that to take place. And so if you think about have the end in mind, then you understand all the steps needed to go from the beginning of that transaction to the end of it, and simply have the systems to delegate and to execute that work. And so that is seeing everything from the top down. Or if you have another type of transaction that's probably a quick and dirty debt transaction of like an IT company, and you already know how those types of transactions work, then you can already imagine the types of people that execute those types of transactions and so on. Or if you have somebody who's doing a Reg D offering for a mid-stage deal that has revenues and they only want to do a Reg D offering, you can also imagine the type of work that is needed, the types of regulatory documents that need to be filed, and everything that needs to be done step by step. And then if you do that, if you see everything from the top down and you have like a map of all of the pieces that are needed for the transaction to complete, then you can actually work with any type of transaction, because it's not really about knowing everything. It's just about knowing how to figure out everything. And that's more important than knowing everything. And when you do that, then you can build the right team around you and the right contractors, team, consultants around you who can execute and find out the unknown pieces of the puzzle. Because 99% of the problem is defining the problem. Then once the problem is defined, then the answer reveals itself. It's like a formula. And so those are the three pieces. So number one, make sure that when you talk to people, people will try to confuse you with all this information, but just remember, objects, relationships, and that's it. Honestly, that's it. Objects and relationships between these objects. Break these objects down in a transaction. The objects, they vary, but the ones that I use are typically the principal involved, the company or companies, the transaction, and within that transaction, within the objects, you have different objects underneath. So for example, in a transaction, you will have and types, you will have debt or equity, the amounts, in the amounts, you'll have what is the regulation, what is a regulatory filing, is it a Reg D, or is it just a syndication, is it a JV partnership, and so on and so on and so on. And so the things that matter, just focus on the things that matter and don't get distracted by if it's quantum computing or if it's a crazy hedge fund or whatever. Just look at the objects, relationships, and sometimes even the time frames too between these objects and relationships. And then you want to make sure that you want to remember, basically the second point was there's nothing new under the sun. Learn how to recognize patterns and then use the pattern recognition to so that you have a better set of rules for defining your objects and relationships in the context of the types of transactions you see. So the objects aren't static, it's based on pattern recognition and experience. And so that's the second point. And the third point is try to see things from the top down, have things with the end in mind, so that if you look at with all these sets of objects and relationships, after you filter out all the noise, you look at the main parts, you understand you already have a filtering system based on, types of patterns that you see if in your particular deal flow, and then you look at the types, you look at if this transaction was to get complete, how would it look like and who are the most likely types of candidates to complete it, and then just reverse engineer all of the steps needed to do it, whether you need placement agents, whether you need consultants, whether you need X amount of outreach over X amount of time, and you have X amount of bottlenecks, is just to complete the entire thing and reverse engineer it. And so with this, if you apply these 3 principles, you'll be able to actually understand any transaction if somebody tells you, and then you'll be able to understand how to route it to the right place. And that's pretty much it. And so I thank you for watching this quick video. And if you would like to learn more about how you can raise capital without the typical inefficiencies of the lower middle market investment banking process, head to raises.com and we'll take it from there. So I thank you for the quick video, and I'll see you in the next one.